Good morning, traders from Toronto. Still struggling with this sore throat. Good morning, traders from Toronto. It's 9:02 a.m. Eastern U.S. time on Thursday, the 11th of August, 2022. Thanks for joining me this morning. This is episode number 2291. I saw some messages in my website's email stating that there's something wrong with the trader bite yesterday. And as announced on Twitter, there was no trader bite yesterday, so that's why you didn't see one. So that's where we are. We'll have to put up with me kind of pausing for a minute to cough. Uh, Again, still have a ticklish sore throat. Um, Again, this is episode number 2291. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the convergent trading pre-market summary sheet this morning, the US PPI surprises quite handily this morning. Came out at 8:30 a.m. Eastern. PPI month on month came in at negative 0.5. Producer price index month on month for July, negative 0.5. The prior is plus 1%. The forecast is plus 0.5%. Big reversal there for the month. Doesn't mean that it's over. And then core PPI came out at the same time. Core PPI month on month for July came in at plus 0.2, expected at 0.5, also showing lower producer price index levels. And then at the same time, we got initial jobless claims for last week, and those came in at 262,000, slightly higher than the 258,000. The prior is 248,000. So initial claims increasing, which may show up in the employment report next month. So that's really what's driving things. The other piece, just note that Japan is closed today. The other piece is Disney reported yesterday just outstanding earnings, big boost in income and profits on the parks. Have you looked at Disney park prices lately? Ouch. Um, and that really is giving the market a bit of a boost. Fed speakers yesterday came out in the lineup following the CPI release to say that their tightening bias is still unchanged based on that outstanding result yesterday. I mean, let's face it, inflation is still up, what, 8.5% year on year? It's still higher. It's just slowing down based on yesterday's numbers. Um, so this is where we are. So that's those are the main pieces. There are no events scheduled for today. There is an Australian new home sales month on month, but it doesn't show the time. Looking at earnings, Cardinal Health is a big one this morning. Pre-market, no other major releases, earnings releases. Note again that this has been updated with the ranges for the key products, key futures products in terms of the daily range. I updated the rotations and I didn't update the range until today. Usually these are done on Sunday, but again, I'm supposed to be on vacation this week. The S&P, looking at the S&P, um, we had balance this morning. We were mostly balanced, and now we've been trading at these higher prices for quite a bit. So we've actually become a multi-distribution profile rather than a balanced profile. The volume is pretty strong this morning. Excuse me, I got a cough. Um, the Again, the volume's quite strong. That's pretty good. The inventory, the overnight inventory is 93% long. 93% long coming in. That means 93% of the volume at price has occurred above the prior close or settle. The range is 40.25 points, pretty decent range so far, well within one standard deviation, giving us another clue that this may be a somewhat of an active day, and we are holding well above the 4,200, which was our target from Monday, is the 4,200 test area. And then the point of control of 42.22 is above yesterday's range. So we're opening in a gap this morning in the S&P into a thinnish volume area, composite volume area. We'll see how that plays out. Crude oil really pushing higher this morning. Crude oil turned up, and if you recall, well, I don't know if I said it here. I think I did. The big balance price in crude oil above is 93.80, and we're approaching that. We're at 93.50. Crude really performing strong. We're very close to the overnight high of 61.39, 93.61. So that's those are the big pieces. Let's take a look at our charts. I don't have a review other than to say, I wasn't here for the CPI yesterday, but the night before, the trader bite before, I had talked about the 4140 being a key area to look at. When was that? That was Tuesday, right? So what it did is it tested 4138 from below, and it ended up extending. It ended up extending trading down that morning. So that little plan from the last trader bite was had worked out. We spent most of the session sitting below. It's right here. Man, something's up with this data. That's clear. Reset. Sorry. I apologize. My throat is just so incredibly scratchy this morning. Let's take a look at crude. Here's crude. Crude had an interesting, but it put in a lower high, and then this morning it is tearing right up towards the magnet, the big magnet right here. This is this area right here. Expecting crude to push into this, rest for a little bit, and then trade this for a little bit. I talked about this is a TPO chart with merged profiles. What that means is a TPO is a 30-minute time frame. Now, I'm generally using volume, but on thinner products, market profile tends to give me a little bit more clarity. And what we did is 2 days ago, we created this composite, and then we ended up kind of staying above the MC point of control of this composite and breaking into the next area up. So this is where I said, hey, it is very likely to push up into this 93.80. Okay, so we had battled the balance down here, and we had opened, tested up into the next balance area right there, and we ended up finishing in the upper range of the lower bounds. So the hypothesis is still valid that we are likely to test higher. In other words, this thing is having a hard time holding the MC point of control and staying below it to further discover prices lower, to further find buyers lower. What it did is it held prices higher. What was a surprise is that yesterday it opened and it tested right into the MC point of control, only to finish the day higher. Crude settled at 91.93, setting up what was basically a trend up close yesterday, setting us up for a run towards that 93.80, and now it is and now it is pushing there. So this puts us puts crude in the next key balance up. This tells me that unless news comes out from OPEC Plus, that crude is likely done to the downside. Again, crude is likely done to the downside. It created a proper test down yesterday of the MC point of control, and it turned around and it pushed higher. Let's get the crosshairs. You have this, if you're part of Convergent, you have this in your master levels, the MC point of control here at 88.32 or so. It pushed right into that and then tested, put in a higher low, and then it finished strong. So yeah, so to me, crude is just long, long, and strong. Um, not not really interested in looking for structured shorts in crude until we tag the 93.80 and until it shows weakness. Looking at the S&P, I merged yesterday's profile or the day before yesterday's profile into this, and you can see the S&P has incredibly sharp balance right down here at the 4150 in time, and then we have the balance down at 4120 down here, which which comes to us from May, June, and we've been maintaining trading above there, above 4150. So what we see in the S&P is initiative movement, and that initiative movement was driven by the CPI release yesterday. I mean, the release skipped 10 points of pricing in the order flow and pushed higher. So yesterday, pretty decent rotation down for a test, and it finished quite bullish above the developing value in new territory, leaving this gap area behind below us. So to me, the S&P looks quite bullish still. I don't see any signs yet that this thing's overextended. I want to remind you and invite you to just trade smart, in that your job is not to sit here and say, if there's like even a faint thought in your mind that this has gone too far, or there's no way they'll keep going up, or this has run quite a ways so far and there's this big gap, and that sort of thinking is going to cost you money. And if you keep doing it, the rest of us who are trading with the trend are happy to take your money. Although I feel like when I get paid when I trade, it's not because you paid me. I'm not trading against you. So we're not competing with each other directly. We are competing in the same game, but I derive payment from the change of value of the underlying product. And that includes, the stock market creates wealth out of nothing, right? You buy Tesla at some price and it goes up to $700 or whatever. How did that happen? Uh, so that's where we get paid. You don't have to lose for me to win. I just read somebody's tweet thread about this, and it's just, I am really sorry to say this because I don't know if this person holds themselves out to be a professional, but I don't know if they are. I don't know what their pedigree is, but that is just dumb. I mean, you don't make money when the market makes new all-time highs. Who's paying for that? When everybody's making money in their 401ks and retirement accounts, their stock accounts, who's paying for that? And that question is a whole lot more complex because it depends on your time horizon, it depends on the instrument you're using, it depends on if the person who sold you the shares that you bought before it ran up, if they are hedging their position, and so on and so forth. So what we have here is a market that's telling us that it's done to the downside. We traded well in the 41.20. We moved our point of control to 41.50 if you combine it, and we're moving away from here. Um, we're moving away from here. And so if we're moving away from here, you shouldn't be selling. Unless, of course, it starts to close at the low end. It starts to have a hard time putting in higher prices, and it breaches that low. Now you've got a market that's putting in that's potentially putting in a rounded top, and a market that's likely to start filling in structural gaps beneath. Let's take a look at the big picture in the S&P. This looks a bit messy now because I am zoomed out, but this is the May June balance that we were stuck in. We were stuck in here in an incredibly classical sense. We we had balance, check. We retested balance and held it, check. There's your 41.20, and then now the market has moved above that balance, and what it's doing is it's moving into this balance right here. Okay, so let's zoom in on that action to see where we are. The bands that you're seeing are single prints from the past, and you can see that we are repairing a lot of structures. We have a gap right down here, so that gives us a little bit of a poor structure to work with for later, which brings us back into the 41.20. If we start to move into the gap here, especially if we take out the gap mid, the 41.20 is likely to play out. But what we're doing is we are initiative buying away from value. Pay attention because that's the sort of action that you don't want to fade. Okay, so looking at the intraday chart, there's nothing about today's action so far that tells me that the buyers are weak. We created a low volume node at yesterday. Oh, oops, sorry. I was like, man, that looks like a crude chart. It is a crude chart. Look at this gap on CPI. Ooh. So we've moved higher. We've moved higher here. We have a double distribution right in here. The cutoff point, which was tested from above, right in here. So you can see we spiked up, then we spiked down, and then we held higher. So if this thing is looking to continue, you're looking at 42.32 being approximately 42.32 being the LIS, with full session mid, full session VWAP on top of each other at 42.27.26, and the point of control being at 42.22. So this region right here is presenting some support. As long as it stays above it, it is likely to continue to explore higher. And looking at our levels, a little bit higher, we're pushing towards that 42.50, the next key area up, and then from there we're looking at 42.70 above. So 42.50 right here. This is the key resistance, and 42.70 above. So to me, this is very much bullish. It is not looking back at all. You can see that we've moved from balance to imbalance up here. There's really no reason to short this unless the conditions change. So here's a zoomed in version of that. And you can see that we were imbalanced for a little bit of time, pretty choppy trade, and we broke out of there and we're trading higher. So unless this thing fails and becomes responsive back into balance, you need to be tentative, in my opinion, with your selling signals and favor your buying signals in these current conditions. Let's reset this. So that's where we are. What are we looking at for today? This is the kind of action that I'm not a huge fan of. What this action is that it starts to you start to really need to reference, April, May action. You need to go way back, pull up like a 120-minute or 240-minute look back to see what kind of auction has taken place back then. But this morning, I'm expecting this to be an open auction out of range. I'm looking for it to be responsive, maybe a potential reaction at 32, but most likely a reaction at 26.27. 27.26 here, and then look for it to turn up, consolidate for a while in range, and then squeeze higher, push into the 42.51 area, and then from there it's the 70, right? 51 and 70 above there. That's your primary scenario. No reason to get too eager this morning. Let it find its footing. The secondary scenario, open auction out of range, pushes the overnight high, squeezes higher, and then hits its 42.50 and then gets responsive. It finds its sellers and it has a reaction to 27.26 and it pulls right back into the 42.20, and then you have a gap to settle trade back into yesterday's settlement price consolidation before it pops. It's likely to pop higher into the close. So the levels are the same, 27.26, 20 down here for the overnight point of control. And then we have the settlement price, which is a 10. And then it is likely to push down into yesterday's point of control, 42.04, and potentially the double O before it bounces. I don't expect that much range to the downside. It's 50 points of range. I expect it to be fairly slow. There is nothing on the calendar. There's no new news to come out, and it is likely to just kind of hover in this area. If this thing takes scenario one and starts pushing through the 51, expect a VIX squeeze. Expect ranges to drop. Expect volume to drop. Expect the VIX to get lower. Expect the VIX to get lower and for this thing to be a grind, and then you need to start looking at the bigger areas and trading almost like an investor. That's what we get when the market is pushing higher and higher and higher and higher in lockstep. Okay. Good luck, and I will catch you tomorrow. Don't forget to hit the subscribe if you're not a subscriber to the channel, and hit the like button. I would appreciate it. Good luck. Watch your risk. Don't be a gambler, and then be here tomorrow. Good luck.